Micron has already gained more than 50% since one of the strongest valuation signals activated near $746. But now the indicators are sending mixed messages. The revenue momentum oscillator is flashing red, and Micron's trailing P2E looks expensive. At the same time, its forward P2E is still near 10. Another major valuation signal remains active, and my earnings model points to higher prices if current estimates hold. So, is Micron near a top, or does this rally still have room to run? Let's start with the revenue momentum oscillator. This indicator compares Micron's stock price growth with its revenue growth. When revenue grows faster than price, it turns green and suggests undervaluation. When price grows faster than revenue, it turns red and tells us the stock is moving ahead of its fundamentals. Micron is currently in the red zone. That sounds bearish, but historically, the red zone has not marked an immediate top. Since 2010, Micron has entered this zone 5 times. Based on my data, those periods lasted 12, 21, 21, 24, and 19 months. The current red period has lasted about 10 months. Based on history, it could continue for another 2 to 14 months. The average previous period lasted about 19 months, implying roughly 9 more months in the current cycle. Micron's price also continued rising significantly during several of those red periods. So this indicator warns us that the stock is no longer undervalued relative to revenue, but it does not tell us that the rally must end now. Next is forward P2E. This compares today's stock price with the earnings analysts expect Micron to generate over the next year. Since 2010, Micron's forward P2E has experienced several spikes into 20 to 25 range. Today, it is sitting near 10. That means the current forward valuation is still less than half of several previous cycle peaks. During the dot-com bubble, Micron's forward P2E reached approximately 80. I would never use 80 as a reasonable target, but the comparison shows that today's forward valuation is nowhere near that historical extreme. If Microns deliver the expected earnings, the stock could rise through earning growth, valuation expansions, or both. But forward P2E depends on forecasts. If analysts lower their earnings estimates, the stock can suddenly look much more expensive. The trailing P2E gives us the other side of the story. Micron's trailing P2E, based on the previous 12 months of earnings, is currently around 51. Since 2010, the more significant spikes were generally around 20 to 30. So a trailing P2E of 51 is clearly elevated compared with recent history. During the dot-com bubble, trailing P2E reached around 100. Again, that does not mean Micron has to reach 100 today. The important point is that past earnings make Micron look expensive, while expected future earnings make it look much cheaper. That gap means the bullish thesis depends heavily on Micron delivering strong earning growth. Now, let's move to the signal that activated near $746. This indicator compares Micron's EV to EBITDA yield with its 2-year average. Historically, when it fell below -1 standard deviation, it often marked the beginning of an uptrend. The signal remained active until the indicator returned towards zero. Based on my backtest, This happened 5 times since 2008. The stock gained approximately 100, 430, 150, 30, and 50% during those periods. The current signal activated on May 8 near $746, and Micron has already gained more than 50%. That means the current move has matched the two weakest historical outcomes, but it remains below the median historical gain of around 100%. More importantly, the indicator has not returned to zero. It remains in a downtrend rather than reversing upward. That does not guarantee another doubling, but I do not yet have confirmation from this indicator that the cycle is finished. Finally, I modeled Micron's stock price against earnings per share using linear regression. Using the estimated EPS for the June 24 earnings report, the model gives an implied price near $1,280, relatively close to the current market price. Using next year's estimated EPS, the model produces a price near $16.50. Using the estimate for 2 years from now, it produces a price near $1,800. These are scenarios, not guaranteed price targets. The model is only valid while the earnings estimates remain reasonably stable. Micron is a cyclical company. Memory prices, supply, demand, and analyst expectations can all change quickly. Putting everything together, Micron is no longer a low-risk valuation zone. The revenue momentum oscillator is red, and trailing P/E is elevated compared with recent history. However, forward P/E remains near 10. The EV to EBITDA signal is still active, and the EPS model suggests more upside if earnings estimates hold. My base case is that the broader uptrend may continue for another 2 to 14 months, with the historical average pointing to roughly 9 additional months. I would not call the top simply because the revenue momentum oscillator is red. But after such a large move, I would expect higher volatility. I would closely monitor earnings estimates, forward P/E, and any reversal in the EV to EBITDA signal. Micron is no longer obviously cheap, but based on these indicators, I do not believe the cycle is finished yet. Please let me know, what do you think? Do you think Micron reaches $1,650 before this cycle ends? Let me know in the comments and subscribe for more data-driven stock analysis.